Desert Gold, we're a West African regionally focused explorer and developer. We have two projects, a 440 square kilometer project in Western Mali called the Senegal Mali Shear Zone. It's our flagship. And we have a 300 square kilometer project in Western Cote d'Ivoire called Tegba. It's earlier stage, but nonetheless very exciting. And we'll get into the reasons why. So, as I mentioned, we've been focused regionally in Western Africa since I became the CEO in 2015. We had assets in a number of different jurisdictions: Rwanda, Senegal, Mali. But ultimately, we ended up focusing our efforts in Western Mali, which we believe to be one of the most prospective gold belts in the world, and still somehow vastly underexplored. And as I mentioned, roughly a year ago, we diversified the portfolio with an acquisition in Ivory Coast, which is one of the best jurisdictions from a regulatory perspective, from an infrastructure perspective in Western Africa, but also vastly underexplored, which is a common theme throughout the region. A little bit about management and corporate. My name's Jared Scharf. I've been the CEO since 2015. My background was in capital markets in Toronto, with an emphasis on the extractive industries. I then pivoted into the on the corporate side. Got involved with Desert Gold as an independent director back in 2012, and helped the company with its acquisition strategy, pivoting away from a project it had in Nevada into a jurisdiction that we felt had more potential, was vastly more underexplored. Diallo Sheikh Ousmane is a very important person in the company. He's our VP. He's ex-Acacia, Barrick Gold, West African subsidiary. 15 plus years of experience doing exploration on the Senegal Mali Shear Zone, regional specific experience, which is important. Suleiman Sidibé, a regional manager with over 15 years of experience, highly specialized in logistics in this part of the world, which is absolutely what you need. Well, here's kind of the regional setting. Our two projects, the Senegal Mali Shear, 440 square kilometers. It's right on the Senegal border. Our project literally goes up right to the Falémé River, and on the other side of that river is Senegal. And the Tegba project, it's about a 2.5 hour drive from the capital, Abidjan. Very easy project to access from a logistics perspective, from an infrastructure perspective. And we're really looking forward to getting going on that project. So as I mentioned, the Senegal Mali Shear Zone is our flagship project. We've been consolidating ground along the shear zone. We got our first little piece of ground back in 2012. The portfolio really didn't change much. We did some exploration. And then in 2015, 2016, when I became CEO, we really started doubling down in Mali and expanding our footprint. And we put together what I think is one of the most compelling blocks in all of Western Africa, certainly along the Senegal Mali Shear Zone. And as you can see on this map, we've got some pretty significant neighbors. Allied Gold borders us to the north on the northern edge of our property package. They announced a plan of arrangement with Zijin Mining. We're waiting to see when that goes through. So our neighbor could soon be Zijin. On our southwest boundary, you have Endeavour Mining's Sabadala Massawa group of mines. That was formerly Teranga. It was a big $1 billion plus acquisition they made when they bought Teranga. And Resolute's Mako mine, also further to the southwest along the main transcurrent. To the east, along the Senegal Mali Shear Zone, that dashed line going from north to south. Like I said, you have Allied Gold. Then you have our property package, the Senegal Mali Shear Zone project. It has a little over roughly 1.3 million ounces of combined measured and indicated and inferred resource. There's all kinds of reason to believe it's going to get significantly bigger, and I'll get to in a little bit more detail as why management believes that to be the case. And then there's about a 50, 60 kilometer gap of unconsolidated claims. And then you get into Barrick, one of their flagship assets, the Loulo-Gounkoto complex of mines that was formerly Randgold. 15 plus million ounces produces, I don't know, 700,000, 800,000 ounces a year. It's a monster. B2's Flagship Fekola mine, a little over 5.5 million ounces. I think it could be more by now. And they're producing 500,000 to 600,000 ounces a year, and they're spending a lot of money on brownfield exploration as well. So this is a prolific belt with a long tenure of successful mining, a lot of M&A activity, and we're right in the heart of it. And so a little bit more detail, just drilling down a bit on the project. This is a plan view of the group of licenses. And we're showing you here 4 major mineralized corridors that go through the license. And every purple dot that you see on this license is a golden soil in the anomaly greater than 50 part per billion, going all the way up to 16,000 or 16 grams per ton. And what you see with the black stars here, these are gold zones that have been discovered either by us or our predecessors through drilling. And in the white boxes, we presented some highlighted drill intercepts in terms of grade over width, roughly true thickness. And really what this image is meant to show you is the sheer scale of gold mineralization in this part of the world, and specifically on this property package. And there are 4 major mineralized corridors that go through this property. Starting from the north, in this little zone called Manicoto, there's a corridor which we call the Barani corridor. It's roughly 25 kilometers long. And then there's a secondary northeast splay that cuts across the Barani corridor called the Soa corridor. It's roughly 8 kilometers. And then down here, there's another one of roughly 15 kilometers, the Mogia Farara corridor. And then over here, there's another corridor called Gorbassi, and this goes on for about a dozen kilometers. And the larger black stars that you see here are where we have existing resources that make up the resource table here on your lower left. I won't go through it in detail. It's more for your perusal. But what I will say is every one of the gold zones that are included in this resource are open to depth, down plunge, along strike, and there's opportunity in every single one of these zones to make them significantly bigger. And the other thing that I would mention about these gold zones is these zones are not happening in isolation. They all follow these structural controls, as I've kind of outlined for you, highlighted, and you can sort of see how they will hug these structural controls. And although we do have some gaps in our data, of course, when you're looking at trends that are this big, we need to do more work and more drilling. And the likelihood that these zones all connect up is high. And I'll show you a couple of examples of that. Earlier this year, we put out a PEA for our small mine. One thing worth mentioning is the majority of the gold zones on this property package have an oxidized profile to them of a varying degree. In some cases, the oxidation is over 100 meters thick. In other cases, it's 15, 20 meters. So about 16 months ago, management started looking more seriously at going into mining. And we did an internal desktop study. It seemed to make sense, so we moved forward with a PEA. And the highlights of the PEA, what we envision is open pit, free digging oxide, and the grades are good. This is one of the lowest cost mining jurisdictions on the planet. And so we have initiated the first phase, which will be starting with a 10 ton per hour, 240 ton per day operation using a gravity circuit. Recoveries, as per the PEA, are roughly 68%. And the economics look very good. All-in sustaining cost per ounce at around $1,100. And in the current gold environment, it should generate significant cash flow. And the objective is to use that cash flow to fund the company's exploration, but also to fund it and remove the going concern, take it off the table, as is can be an issue with junior mining companies. We also raised $7.2 million a couple of months ago, I think maybe about 4 months ago now, 3 months ago maybe. We priced it at 8 cents with a 12-cent warrant. The stock's been trading sort of between 13 and 14.5 cents. So we've been very pleased with the way the stock's traded since the financing. And the use of proceeds will be to fund the first phase of the plant, which is about $2 million US. We put out some guidance a couple of weeks ago Site is advancing quickly with the engineering and earthworks, and the plant and equipment, as we speak, is on a boat from China. Will arrive at the port in Dakar in early July, and we're targeting mid-end July for commissioning of this small mine. So with any luck, if management can stick to the timeline, we should be producing gold in the second half of this year. In addition to the guidance we gave out regarding the small mine, we also announced a 4,000-meter RC program roughly a week or two ago. That program's just kicking off, and we will be targeting some of the best areas along these corridors, areas like Barani, Barani East, Soa, Fakiti, Mogia, Farara South, for example, where we have 450,000 ounces. But all these systems have the potential to get significantly bigger. And so we're going to test those ideas with the drill rig. And so in Western Mali, we run into the rainy season sort of mid-July. And that's when we kind of have to wrap up our drilling, especially in the southern part of the property near the river. The ground conditions get really wet, and it's difficult to move around heavy equipment. So with any luck, we'll have drill results for the market here in Q3 of this year. A question I often get asked as a junior company is, when you have a property this big with so many targets on it, how do you prioritize? And this graph just takes you into a little bit of detail regarding our exploration methodology. But in a nutshell, when we're evaluating so many different targets with so much potential, really what we're looking for is scale, tonnage. That's what will get the majors interested in targets that we have in our property package when we're drilling, when we're exploring. And so we're looking for something that has the potential, a zone that has the potential to be 1 million plus ounces as a standalone, or a series of zones within very close proximity to one another along a structure. Gorbassi West, West North being a very good example. 2 zones that sit on a structural contact that are separated by 300 or 400 meters. And you can think of those gold zones kind of like a series of pearls on a string. And these mineralized systems kind of expand and contract as they follow along these structural controls. And so we have zones that we have opinions on based on the geological mapping and the work that's been done to date. But at any given moment, a priority could leap up several notches on the priority scale if we step out into something that gets much more compelling or more interesting from a grade over width perspective. And that happens a lot in this part of the world. In Côte d'Ivoire, we've got a newer project. However, this is one that we're also really excited about. It's, let's call it earlier stage, but it sits in the heart of one of the more interesting gold belts in Côte d'Ivoire, because there are a couple of really nice mines there, but it's also vastly underexplored relative to, say, some of the districts in the northeast of the country. So the property is called Tegba. It's 300 square kilometers. We signed an option last year, which is how we got access to the project. Here's a more of a zoomed in regional setting. You can see Allied Gold, which is a bit of a theme. They're our neighbor in Mali. They're also our neighbor in Côte d'Ivoire. And they have these 2 mines, Bonikro, Agba, previously discovered by Newcrest. And then to the north, you have Perseus's Yaouré mine. And we sit here along the Tahini Shear Zone. So it's a somewhat similar situation to Mali in the sense that mineralization is structurally controlled to these major shears, either proximal to them or on a splay off of them. You've got Thor Resources' Guitry project to the south of us. But, when we went into Côte d'Ivoire, we looked at, 1,800 square kilometers of projects. The geological team spent 6 weeks in country. And, the reason why we ended up with Tegba was because Newcrest had delineated quite a substantial anomaly, but they never had a chance to drill test it. And so when we went into the field to stand on the anomaly and verify that it was real, or what we call in situ, it became very evident that there was a gold system of some scale of some sort, but we were going to have to drill it to find out what it is. And so this is a bit more of a zoomed in view of this anomaly. You can kind of see it here in the purple. But when we drill down just a little bit closer, um, you can see the extent of the anomaly. And this is about 4 and a bit kilometers by nearly 2 kilometers wide. And in soil geochemistry, what you're really looking for is some kind of coherency, rather than just noise. By noise, I mean scattered anomalies all over the place that don't really seem to make sense. But if you look at the heart of this anomaly, looking at 50-meter spacings here, you can see 8 or 9 anomalies lined up almost continuously. And when you take it into consideration where the anomaly itself sits, which is proximal to a major shear zone, everything starts to line up really well. And so when our team went and did our due diligence, and we developed an opinion quite quickly that this anomaly is in fact in place and it's real. It wasn't transported material from erosion or anything like that. And so these blue dots you see here, these are air core fences that we have planned to do first pass drilling over the heart of this anomaly. And pending results, if we make a new discovery in Cote d'Ivoire, it'll really change the profile of this company. I think right now the market still views Desert Gold as a solely a one country asset, what we have in Mali, which is phenomenal geologically. But if we make a discovery here in Cote d'Ivoire in such a hot jurisdiction with some really interesting neighbors, I think it'll change things very quickly. So we're quite eager to drill this target, and we're looking to do that this year, and we're fully funded to do it. A little bit more about the timeline. We're sticking relatively close to this. You can see in Mali, the drilling admittedly started a little bit late. That had a lot to do with what was going on with Iran. We were running into fuel shortages. There's also been some geopolitical turmoil in Mali, which has presented logistical issues like accessing things like aggregates for cement more quickly. So we've had some delays, but nothing major, maybe a month in total. So we're still relatively on schedule, but there were some things that happened that were a bit out of our control in the macro environment. So likewise, we anticipate the first phase of drilling to wrap up in Q3 in Cote d'Ivoire, and hopefully we'll present initial results by the end of Q3, early Q4. And as I mentioned, we're looking to commission, sort of mid-end of July. So a little bit behind on this timeline, but that was, due largely to things that were out of our control. So that's kind of it, Lindsay. I went through it pretty quickly, but I don't know if you have any questions or if you want to talk about any more points in detail.
Yeah, you have your deck down like perfectly. So it's well done, well done. There is a couple questions that came in. One of them came
Sure.
in, and it's how do you currently assess the situation in Mali following some of the difficult situations that came up, and could this
Hmm.
potentially impact or threaten production?
Great question. So it's no secret that about 3 weeks ago, there's a series of what appeared to be coordinated attacks in Mali. It was all over the news. Um, Luckily, our asset is about a full day's drive, 15, 16 hours from the capital. We have 2 fully operational full-time camps. So our team is good. They're safe. Work hasn't been disrupted. As I mentioned, simple things that were easily accessible, like aggregates and diesel and so on, have been more challenging to get a hold of, which has caused some delays. That's also been a result of what's been going on in the Strait of Hormuz, not just what's been going on in Mali. Um, I don't foresee this having any impact from us going and moving forward into production, other
Mhm.
than maybe one of the things that we made sure we did when we ordered the plant and equipment from China with our OEM. We also ordered 6 months worth of mine consumables to
Okay.
precisely to plan for these types of potential disruptions. And so we will have 6 months worth of mine consumables on site as inventory in the event that things become logistically challenging.
Yeah.
Um, but it's no secret that we're going to install solar over time. But at the moment, the gravity plant will be run solely on diesel. We have a pretty good stockpile at
Yeah.
site now. But if the issues persist in Iran and challenges in Mali, there could be unforeseen disruptions. But nothing has happened so far. And I would just say maybe one thing from a broader perspective. I've been through three coups in Mali, 2012, 2020, and 2021.
Hmm.
And never once did it disrupt the actual mining and gold mining industry. The companies continued on
Yeah.
operating and working. And so it's unclear to me exactly what's going on politically in Mali right now. It's quite confusing. There's a lot of
Hmm.
noise and a lot of conflicting information. So I don't know how it will all play out. But we haven't had anything significant happen to us other than having issues finding supplies here and there. Luckily for us, we're right on the Senegal border, so we're getting a
Hmm.
lot of our consumables from Senegal rather
Fair
than
enough.
from the capital.
That's a really great answer that you gave, and it's Mali is, yes, it is definitely a complex jurisdiction for sure. But we're seeing a lot of this worldwide right now. I mean, things seem to be changing with supply and
Hmm.
demand, supply chains hourly.
Hmm.
And so the
Hmm.
fact that that is the worst thing that you were really having to deal with, I mean, the rest of the world is dealing with the same thing. So thank goodness for
Yeah.
that. Next
Hmm.
question. I think many investors still see Desert Gold as just another exploration company, quote unquote.
Hmm.
But when you
Yeah.
zoom out and you look at your land package, the neighboring producers, the existing ounces, and now the push towards potential production, this starts looking more like a distinct scale build story. So
Yeah.
internally, Jared, when did your team realize the market may be dramatically undervaluing the true scale of what you control?
Oh, I think we've known that for a long time. Um, but there have been a lot of headwinds in Mali in recent years. And I
Yeah.
think that's sort of shrunk our would-be pool of investors, let's just say.
Okay.
But you touched on the real differentiating factor for Desert Gold, and I pull this screenshot back up again because this image really tells it all. We're
Yeah.
wedged in between Allied Gold and Endeavour Mining, and every company that has a land package of this size or similar along this regional structure has a 5+ million ounce project.
Hmm.
And there's a long history of when juniors find something that's too interesting or too compelling here, they don't last very long. They get bought out. And people often ask me the question, well, what's your strategy? Do you want to get bought out, or do you want to go find more gold or go into production? But the truth of the matter is the practical work that we have to do on the ground is the same, irrespective of what corporate strategy you're pursuing. The
Right.
majors want to find something that'll move the meter for them, and that's volume. That's something that
Mhm.
demonstrates the size and scale. And how do you get volume? Well, you have to have multi-kilometer long exposure to these mineralized structures.
Right.
And that's why we've really dug in here in Mali, because quite frankly, this land package is impossible to recreate anywhere else in the world.
This is true.
Um, and so sure, okay, we've got a lot of targets, and that can be a challenge, but it's also a strength, because when you start making geological sense of these targets and the fact that they're all structurally controlled and that they can be sort of linked together. Um, and maybe I'll just pull up just one image to kind of demonstrate what I mean there. So this is a zone that we have, because I have 3 minutes. So this is a zone we have called Gorbassi West West North. This is the pit constrained outline here in gray.
Hmm.
And there's a major geological contact here that goes north to south. So you have two completely different rock packages on one side of this shear. And this is probably a splay off the main transcurrent. On one side of it, it's not mineralized. And on the other side of it, it's almost continuously mineralized. So you've got 200 and some odd thousand ounces here. You've got another 4 kilometer long zone here. And you've got this small little gap here of, I don't know, call it 400 to 500 meters. But there's
Right.
noise in between this gap. But when you step out along this feature, and I'll just, pardon me for the scrolling, but I just want to illustrate the point. It goes on for another 10 kilometers of continuous soil anomalies. So as we flesh out those types of targets along these mineralized structures, it's a certainty it's going to get bigger. The question is
Mhm.
just how much bigger can we make it? Is this a 2 to 3 million ounce land package? Is that all it's ever going to be, or is it a 5 to 10 million ounce package like some of our neighbors? We can't say for sure. We have to do the work, but that's the core question that we're trying to answer with the exploration that we're doing.
No, fair enough. Fair question. Okay, so one thing is, pardon me, one thing sophisticated investors often look for is whether a company truly understands the long game of value creation in mining. Now, as you've
Mm-hmm.
advanced the SMSZ project, what have been the biggest signals to you that this project could ultimately become strategically important to larger producers operating in the region?
Yeah, I mean, I think we kind of already answered it, right?
Yeah.
So, you've got $250 million mills on all sides of us, right? Down here, Endeavour, the Sadiola mine, they've been in operation for a long time. And so if, we find a couple million ounces with good metallurgy and decent grades in this close of a proximity, it's probably just a buyout, right? It's just the easiest way for them to do it.
Yeah.
And in most cases, anything that we find here in the northern half of this property package is within a reasonable trucking distance to the Sadiola mill. Likewise, the stuff we have down here going over to Sabadala and Massawa. Um, so there's lots of incentive, and there's
Perfect.
a like I said, there's a large, um, significant history of M&A in this belt in particular. At this picture you're looking at.
Absolutely. Well, that's one of the things that you brought up. We have maybe a minute left here, but you did bring up in one of the podcast episodes together that M&A is massive right now, and you're going to start seeing it a lot more. So
Hmm.
we're watching out there, Jared. We're just taking a
Hmm.
little peek there.
Yeah, yeah. Follow along. Things can change
Follow
quickly in
along.
this business.
That's so true. Well, thank you so much again for your time and for the presentation and all this information. I mean, Africa is definitely something that's in the spotlight, and we want to know more. So come back and teach us more.
Of course, my pleasure. Thanks for having me, Lindsay.
Thank you. We'll talk to you soon. Bye.
Bye bye.